Good afternoon, everyone. My name is Carl Voikin, and I'm the chairperson for the events for the JMU Federal Dukes Alumni Association. And we have just a couple of admin facts to go through here today before I introduce everyone. Please, for the technology reminders for everyone who's attending virtually here, just remember that we have a Q&A box. I highly encourage you dropping your Q&A there. Remember that all those questions are probably seen by other people, so just keep them professional, nice and good and clean. And we'll get to those questions and answers as we can throughout the briefing. And with that I'd like to go to the next slide, please. Okay, so what we have here today for you, Federal Dukes is presenting Navigating Federal Contracting, Key Trends and Opportunities for Small Businesses. We are very excited to announce that we had a sponsor for this event, John Marshall Bank. And before we get to our actual event, I'd like to kick it off to John Marshall Bank just for some opening remarks and to tell us about themselves and their links to JMU. Thank you so much.
Great, thank you. So I'm James Estep. I'm with John Marshall Bank. We are a wonderful, growing community bank based out of Reston, Virginia. We've got 8 locations. We're only in the Metro DC area. I am our director of business lending. I've been with the bank about 8 years. I've been in commercial banking about 20 years. I'd also like to thank, I don't know if she's on this, but Anne Marie from the Federal Dukes. She's my friend and neighbor, and we really appreciate being a part of this. John Marshall Bank, I think the key when you hear about us, you think about pristine asset quality, increases in net income, revenue, margin, all the things that a lot of the other local banks are struggling with. So we're hiring people. We've got a great team, and it's really all about personalized banking. And a lot of banks say that, but we truly, we truly show that. And so there's no 1-800 numbers. It's just people. We've got an expertise in certain industries. So government contracting is a huge emphasis of ours. We've got a team of folks that have a tremendous amount of experience. And unlike other banks who are kind of backing off some of that right now with what's going on with Doge and the recent government shutdown and other things. I apologize. That's not us. So I will now send it over to my colleague, Alex Converse, who's the head of our government contracting team.
Thank you, James. And first off, I'd like to thank everyone for not muting James's mic since he's a Virginia Tech alumni. So appreciate that. My name is Alex Converse, a JMU alumni of 2010. And I like to remind James on a regular basis that we beat Tech in football, so go Dukes. While I have no relation to Converse Hall off the quad, nor Converse All-Star shoes, I am a senior vice president at John Marshall Bank and manage our Fairfax market. I also lead our GovCon team at the bank, which supports over 100 GovCon clients of all sizes, ranging from startups under $1 million in revenue to lower middle market clients over $300 million in revenue. John Marshall Bank currently has a legal lending limit of $46 million per relationship, which is a percentage of our capital and continues to grow. Whether a government contractor has won its first contract or has multiple awards, we provide support by taking the time to understand our clients' needs and offer a tailored solution through financing and cash management with online banking. Approximately half of our GovCon clients have lines of credits that provide access to short-term working capital, primarily to cover payroll while waiting to collect receivables. And our clients often request bank reference letters from us to submit with their contract proposals to reflect total access of liquidity between their line of credit and deposits on hand. And so depending on when that request comes in, we can typically turn that around same day. We also offer term loans to fund acquisitions, equipment, ownership changes, build outs, operations, and real estate, to name a few. Most office leases require a security deposit, which is typically in the form of a letter of credit, which we can provide as well. Although conventional financing is ideal for government contractors due to more favorable loan pricing and structure. There's another option for startups or companies that don't qualify for conventional financing, and that's through the SBA 7A loan program. John Marshall Bank's a preferred lender that is authorized to approve up to $5 million in 7A loans on behalf of the SBA, which provides additional support to the loan with an SBA guarantee. So a nice other option to have there. On the cash management side, the bank is constantly upgrading its technological capabilities to ensure that our clients' banking needs are met on a day-to-day basis. We frequently move over clients from large banks, and some have initial concern that a $2.3 billion community bank is unable to support their cash management needs the same as a much larger bank, which I'm unaware of ever being the case for us. In fact, many of our clients that make the move to us from a larger bank don't realize what they've been missing. And that's direct contact to our support teams via cell phones and direct email, which James mentioned before. So no 1-800 numbers. We have local decision making with our executives sitting out of our headquarters in Reston near Wheelie Metro. And just our overall responsiveness is truly what sets us apart. So as good community bankers, we like to serve as a Rolodex for our clients, since we enjoy making introductions to the appropriate party that can help better their business, whether it's an attorney, CPA, wealth advisor, real estate broker, insurance agent, consultant, or other government contractor. Our GovCon team has built its Rolodex over the years through strategic networking and by actively attending various events hosted by FCA, NVTC, CCAF, which I'm a member of, by attending conferences like the Government Procurement Conference, HubZone Conference, PSC Defense Conference, attending award ceremonies like NVC GovCon Awards, NVTC Tech 100 Awards, just to name a few. And as for other community and regional banks in the area, there are certainly some good ones out there, no doubt about it, but there are also quite a few that have serious issues. Some have even decided to no longer support government contractors. So John Marshall Bank, on the other hand, has pristine asset quality, which James mentioned before, and has only increased its focus and efforts in the GovCon space. We're not only supporting our existing clients this year through Doge and the shutdown, but have onboarded several new clients this year that were concerned about their support from their previous bank. So for the most part, all banks offer similar products. And when you don't need your bank, it's fine. But in times of need like PPP, Doge, the shutdown, or any sort of hiccup with your company, you want a bank and relationship manager that will be there for you, and especially one that graduated from JMU, of course. Our CEO, Chris Bergstrom, also went to JMU and is a huge supporter. He attends most home football games and has an excellent tailgating spot up front. So I'm sure many of you have seen him there. In addition to our CEO and me, we have several lenders, portfolio managers, and credit analysts that graduated from JMU, which is why we are very excited for the opportunity to join the JMU Federal Dukes. So if you're interested in connecting with me, please shoot me a message on LinkedIn. I'm happy to treat anyone to coffee or lunch. So look forward to hearing from you. And without further ado, we have Kevin Plexico up next from Deltek. Thank you all.
Hey, thanks, Alex. I'm free for lunch next week, so if you want to figure that out, I'm happy to get lunchtime.
Let's do that.
Also, I was surprised you didn't mention with the football, JMU has a chance to slide into the playoffs if the things line up right, which is just amazing to imagine. From when I was at JMU, the football program was terrible, so it's come a long way.
It certainly has.
I'm Kevin Plexico, Senior Vice President of Information Solutions at Deltek. For those of you who are in the government contracting space that might be familiar with GovWin, that's the product that I lead here at Deltek. I manage the research team that produces the GovWin product. I was a JMU graduate as well. Graduated back in the 1990s, so it feels like forever ago at this point. But I also have a son who went to JMU and graduated just a couple of years ago, and is now also in the industry. So it's come full circle for me. These are certainly interesting times in the federal contracting space. So I think it's a good time to provide this community with just insights into what is actually going on with the federal contracting market. I think there's, some feast and famine going on, depending on which agencies people are doing business with. There are some real opportunities and opportunity areas, but depending on what part of the market you're in, it can be challenging to pivot to those areas. So hopefully we can give you a good sense for what those areas are, what some of those opportunities are, and give you some information that you can take back to your companies to repivot your strategy. We're also fortunate to have Ken Dodds, another JMU grad. I'll let him introduce himself in a little bit, but he's a government contracting and procurement expert who's going to talk about many of the regulatory and acquisition changes and reforms that are taking place too, and how those impact the market. So please do go ahead and ask questions in the Q&A window if you have them. I think these kinds of discussions are always better when we have an engaged audience. So if you have questions as we're presenting the content, please go ahead and ask them, and I'll either answer them along the way or towards the end. You can go to the next slide. I wanted to start with just a little bit of a level set on where we are last year versus the first year of the Trump administration. We've had impacts with DOGE coming in and lots of cuts that have taken place. We've had people who have exited government that are senior leaders, in many cases, senior decision makers that have left some vacuums in certain areas of government. But we've also had some areas where we've seen spending accelerate. So I thought this was just a good way to give a little bit of a snapshot view of what's happened in the contracting space in terms of dollars spent over the past year. For this slide, I'm only showing civilian contracting. The reason for that is the Defense Department does not share their contract spending in real time the way the civilian agencies do. We have to wait until January to get the full picture of the fourth quarter of defense spending. And since so much spending happens in this market in the fourth quarter of federal fiscal year, it would be pretty distorting to show defense without the fourth quarter. But for civilian spending, I think we've got a pretty good idea of where things ended. You can see that was a little bit of a decrease versus 24, dropping from $295 billion to about $287 billion. But on the right-hand side, you can see the upheaval and we'll just say unevenness in how it has affected different agencies. And many of you have, I'm sure, have seen the headlines, and some of you maybe even been on the front line of experiencing some of the cuts that have been made in certain agencies. Some of the ones that have obviously been on the front page of many newspapers is the steep cuts in USAID, with a lot of the cuts in the foreign aid. You can see the steep decreases there. I think what's remarkable about that 64% decrease is if you think about the federal fiscal year, it starts in October. And so this 64% is really a function of 3/4 of the Trump administration having an impact on that particular area, with 1/4 of it being under the Biden administration. So just, I think, gives a little bit of a sense for the magnitude of upheaval that we saw in that particular agency. You can see some other agencies like HHS, State Department, Education, that have also felt the cuts and the reductions that have taken place under the new administration. And then conversely, we've all seen the movement with immigration enforcement. You can see the steep increases on DHS, and then a couple others that are worth mentioning. The Department of Veterans Affairs, always a agency that grows because of the cost of healthcare, always is something that grows, but it's one of the few agencies that mission really enjoys bipartisan support from both political parties. So one of those situations where, depending on what agency you were in and doing business in, you would have felt some pretty steep impacts on the negative. Some of you might have felt some positive tailwinds, and some of you might not felt anything at all. Probably not very likely, but it's been very uneven. You can go to the next slide. One of the questions that we get from our customers quite a bit is sort of really trying to put some kind of data behind the impact of the DOGE organization and a lot of the terminations that we saw early in the Trump administration. The good news I would share with you is that the volume of impact that we've seen from the DOGE cuts has rapidly tailed off. You can see the blue bar is basically the run rate of dollars for contracts that were terminated for convenience. Now, just one point about this, there's no reporting that says this particular contract was DOGE impacted. We can use things like knowing the priorities of the administration and look at, for example, a contract that was, say, focused on training for DEI and know that was probably a DOGE related cut. But every year there are contracts that are terminated for convenience. But I think this is a good approximation of the impact of the contract cuts that we saw from the DOGE organization and that many agencies have made over the course of the year. The reason we looked at the 2024 run rate is there's a lot of different ways to look at the impact of the cost of a contract being cut. If I look at, for example, the contract value or a ceiling value, that could literally be in the billions of dollars, but we don't necessarily know that contract would have ever achieved that ceiling. So the way we approached it was looking at the contracts that were terminated, what was spent on them last year that was not there, obviously, because the contract was cut this year. So hopefully that gives you a good sense of the magnitude of the impact. And then the other thing that I think is interesting to look at, you see the orange line shows you the number of companies that were impacted by having their contracts terminated for convenience. Overall, about 7,000 companies, which is roughly about 7% of companies in the market, had contracts that were terminated for convenience. The number, frankly, of companies that were impacted is probably bigger than that because I'm sure, one, some companies are subcontractors that had contracts that were terminated, and in some cases, they didn't terminate the entire contract. They might have de-scoped the contract. So doesn't necessarily cover the full magnitude of the impact, but I think it gives a good sense for the volume and percentage of companies that were impacted by the DOGE cuts. And then the last thing I would mention, since our focus today is really in a lot of ways on small businesses, 70% of the companies that were impacted were small businesses. So you could say that there was an inordinate impact on the small business community. But in terms of the dollars spent, it was only $1.5 billion relative to the $5+ billion of total impact. So lots of companies that are small businesses impacted, but impacted on a smaller scale in terms of the dollar amounts. You can go to the next slide. I'm sure many of you were unfortunate victims if you have contracts in the government of the government shutdown in some way, shape, or form. This probably impacted almost every company in some way, shape, or form. Thankfully, that was resolved here just a couple weeks ago, with the government agreeing to extend continuing appropriations through January 30th. So it sort of punts it beyond the holidays and into early next year. There was a lot of puts and takes with that continuing resolution. It wasn't just a government-wide CR that extended funding till January 30th. We did get full year funding for some agencies, specifically the Department of Agriculture, the Department of Veterans Affairs, the military construction budget, and Congress taking care of themselves. The legislative branch also received funding for the full fiscal year. So they no longer have to worry about 2026 funding. But the rest of the government still is, looking for full year funding. In terms of the agencies that did get full year funding, the VA, you can see, got about a 3% increase. It wouldn't surprise me if we end up seeing that being above a 3% when all is said and done, just because the cost of healthcare is going up faster than that. USDA, the Food and Drug Administration, and Rural Development. Might seem like an odd assembly of organizations, but they all happen to be under the one particular appropriations bill, which covers the Department of Agriculture primarily. That particular bill was essentially flat, and that's going to be important to talk about here in just a moment as we talk about the president's budget request versus where appropriators are in the process. And then there were a few other key provisions. One, making sure that government employees got paid. So if a government employee was either whether they were working through the shutdown or were furloughed. They all got paid during that period. They didn't get paid when they were supposed to, but they did get paid. It's important to note that contractors did not get paid. So if you happen to get furloughed, it's really up to your company to figure out how they're going to pay you if they are or not. And the government wasn't going to cover the cost of the salaries of its contractors. It's really just covering the cost of its own employees. And then there was another just provision that doesn't really have much of an impact in contracting, but it is important because it does affect sort of the political strategy that I think is going to take hold when we get to the end of January, which is the SNAP and Women's Infant and Children Nutrition programs were funded for the year essentially. So that no longer is sort of a political issue that is at stake. I think the difficult news to communicate here is that the issues that were at play that led to the shutdown that was 43 days are still there. We still don't have full year appropriations for many agencies, and the issue that was really the crux of the reason for the shutdown, which is the subsidies related to the healthcare legislation, also are still unresolved. So it's not at all difficult to see a challenge again come the end of January that could pose risk for an additional or another shutdown to be had, which only time will tell how that sort of transpires. But it is a risk. We've bought time, but it hasn't sort of gotten us out of the issue that we had in October. Next slide. One of the things that's a little bit unique about this year, I would say the last decade probably, we've had a series of bipartisan 2-year budget resolutions that have set the caps for discretionary spending. We don't have that for 2026, which is one of the reasons that we've had so much challenge with getting appropriations done. There's not sort of a bipartisan agreement on what level of funding should we have for discretionary spending. So the best that we have is what the Trump administration requested. They've requested about $1.6 trillion. That's a flat budget over 25. But when you peel back that a little bit, you can see significant increases are requested for the Defense Department, funded by significant decreases for civilian agencies. This is frankly a pattern that we saw under the prior Trump administration as well. Almost every year, the administration would submit a budget that would call for big increases in defense spending, funded by steep cuts in defense civilian agencies. But because we need Congress to agree on what those appropriations are, and Congress is made up of more than one political party, we need a bipartisan resolution to get funding approved. And what we saw under the prior Trump administration was largely, yes, we agree to the defense increases, but we do not agree with the steep cuts to civilian agency budgets. So the appropriators ignored that, and they have final say in this, in theory anyway. So as we think about 2026 and what we're seeing with the appropriations that are shaping up for 26, it really is a reflection of what we saw under the prior administration for Trump, which is increases for the Defense Department, largely showing up in the one big beautiful bill, which we'll talk more about, and then the cuts that are being requested by the administration, we expect to be either neutered or eliminated when appropriators get done with it. And we saw that really already with the agriculture appropriation, which we talked about, where the administration had asked for steep cuts in Department of Agriculture. And what appropriators provided in that continuing resolution was essentially a flat budget for the Department of Agriculture. So I only share this slide because this is sort of the starting point for negotiations. And then if you go to the next slide, we can put a picture on sort of where appropriations stand in the House and the Senate. I think this is also important to understand as you think about the House and the Senate. The House has the ability to get things done with simple majority. And since the Republican Party has that majority, they're able to get things done without necessarily bringing along Democratic support. And so we really see the appropriations negotiated in the House, tying off relatively closely to the administration's requests, meaning some significant reductions in certain agencies. And you can see that in the year-over-year comparison versus 25. The Senate, conversely, needs 60% or 60 votes to break the filibuster, and that's what they need, therefore, to get a bill passed. And that's, at the end of the day, driving the ship for what's happening with appropriations, which is they're working on what I would describe as a much more bipartisan appropriation level. And I think that that is probably a more reliable view of what's going to happen with appropriations, is looking at the Senate's version of the appropriations bills, and that being more likely what's going to get enacted by Congress versus what the House is working on, since that does, by definition, need bipartisan support. So anyway, just wanted to give that perspective that while the president has requested steep increases for the DoD, the One Big Beautiful Bill essentially provides that. They've also requested steep reductions for civilian agencies, but I think it's very much in question as to whether those civilian agencies will see those kinds of cuts. You can go to the next slide. And I did want to talk about the One Big Beautiful Bill because it does provide a significant set of new opportunities for the contracting community. It covers everything from aerospace and defense, professional services, education and training, IT investments, architecture, engineering, construction. I'll talk a little bit about some of the things that we've seen on the aerospace and defense front. As many of you have probably heard, the administration is very much advocating not only for building more ships, but also building shipbuilding capacity for the military. So there's a big investment there. Weapons and equipment. We've obviously been providing a lot of weapons and stores of our military equipment to Israel and Ukraine to support their war efforts. So there's a fair amount of need to rebuild the stockpile and grow the capacity that we have there. There's investment in the next fighter jet. I think they call it the F-47, if I'm not mistaken. And then I'm sure many of you heard of the Golden Dome initiative, which has a lot of space involvement, since it will involve satellites as well as many missile systems, such as the Patriot missile system, that would be likely to be used to be stitching together, if you will, what that Golden Dome would be. Just some other areas that might not be people might not be aware of. They're in the architecture and engineering construction. One of the big initiatives that's funded by this legislation is continuing building the southern wall on the border between U.S. and Mexico. That obviously carries a lot of IT infrastructure, surveillance equipment, drones. I mean, think of all the technology that goes into monitoring that large geographic tract of land, and manage all of that capacity as well. So plenty of opportunity. I'll just mention this from Deltek's perspective. We've produced a report in GovWin that is freely available. It's free to anyone who wants to access it. You can go to GovWin to get that. I only provide that because it's a resource that goes into each one of these areas in a bit more depth about what's involved in each one. Next slide. And then I think this is my last slide. I wanted to give you a sense for just the magnitude of just the defense side. The left-hand darker blue bar shows what I would describe as the run rate. So these are the amount of money that was spent in these categories in fiscal year 2024. And the reason I'm using 24 is because it's the last full year that we have full year of defense spending. We'll get defense spending for 2025 finalized here in January of 26. But so 24 is the most recent year we have full year data. And then you can see in the lighter blue/gray bar how much was funded by the One Big Beautiful Bill. And one important thing to note is the One Big Beautiful Bill investments are not a single year appropriation. They're a multi-year appropriation. They have until the end of fiscal year 29 to spend these funds. But it just gives you a sense for the magnitude of the amount of money that was made available to these areas. So shipbuilding, we're literally talking about adding $10 billion a year to that $31 billion run rate. For weapons and equipment, adding $52 billion, or think of that as, probably about $12.5 to $13 billion a year added to that 41 on an annual run rate basis. So a significant amount of money is going to be made available for contractors, which is largely the community that they have to go to procure these things. And I could probably show the same kind of charts for DHS and would look very similar. There's a lot of opportunity, but it's limited to a very finite set of agencies. So I think, the guidance that we have for companies is, you need to take an honest assessment of the agencies that you're doing business with, what is going on with their budgets, and where might there be adjacent opportunities in other agencies for you to maybe get into revenue streams that are growing faster and have some tailwind behind them to basically reset your strategy and your growth opportunity going forward. Go to the next slide. So hopefully that puts a bow on sort of the spending environment and the contracting environment. There's obviously a lot going on in the acquisition reform category. So Ken, I will turn it over to you to lend your expertise to this conversation.
Thank you, Kevin. And I am a 91 grad of JMU and a former resident of Hunters Ridge like Kevin. So I'm always happy to do this. I'm the Vice President and General Counsel of the Coalition for Competence in Government Procurement. That's a trade group for government contractors that do business with the government. A lot of them are schedules contractors, and we're going to talk about that a little bit. And before that, I worked for 20 some years at the U.S. Small Business Administration as an attorney and a senior executive for policy. So let's go to the next slide. So there were a lot of executive orders at the beginning of this administration, and a lot of them focused on procurement, more than usual, the focus. And it's a theme you're going to see throughout this presentation. There's unhappiness with the acquisition process and how it's working, especially with the Defense Department. So there's a lot of things that might be in the National Defense Authorization Act, trying to reform acquisition, make it faster, make it quicker, make it more responsive. So we're going to talk about some of these executive orders. The first one talks about making GSA the central buyer for civilian agencies. And that was kind of the idea behind GSA from the very beginning. So it's kind of getting back to the roots of letting them manage acquisition for the civilian side, at least to the extent we can. As I mentioned, the next executive order about DoD is using OTAs to the extent they can, trying to make things faster. People are upset with things being behind schedule, over budget. What can we do to expedite things, keep up with, some of our enemies? The third executive order there, restoring common sense to federal procurement, that talks about changing the FAR, and we're going to talk about the FAR, revolutionary FAR overhaul, and I'm going to highlight some of the sections that I think are interesting and that you should be aware of, and that will be impactful or may be impactful. And then there's the last one there, this executive order about doing things more commercial. Don't create your own system if there's a commercial item out there. Now, that's been a theme in government contracting since the Federal Acquisition Streamlining Act of 1994. I think every administration thinks that's a good idea. It's also going to be, there's provisions around that in the National Defense Authorization Act that's going to come out here in the next few days. The trick or the complicating thing is execution. How do we actually make it so that the people awarding the contracts do more commercial and less, government specific? So let's go to the next slide. So with respect to that consolidating things at GSA, here are some highlights of kind of what they were directed to do. And I'll just talk about some things that I think you should be aware of as a government contractor. One is they did basically close down some procurement shops at some smaller agencies, including SBA. I think it was OPM and maybe HHS. But the idea behind that is GSA has the expertise to do contracting. Instead of hiring people, these agencies to do it, we're going to have GSA do it for them because they're the experts in procurement. Obviously, the potential downfall there is that if you're the administrator of OPM or SBA and you want to know why your contract hasn't been awarded or what's going on, why your things haven't been delivered, it's easier when they're your employees. When you're relying on some other agency's employees, there's, you're basically losing some power. But that is something that has happened, and I think there could be other agencies that do transfer their contracting powers basically over to GSA. One of the other things that they're being taxed with looking at, and this is a problem that industry has been talking about for some time, is the proliferation of these large GWACs, these best-in-class contracts, especially in IT or consulting, where it's kind of like you're buying the same thing, but you have the GSA schedule, but then you also have Oasis or you have Oliant, but you also have CIO SB3 and you also have NASA SOUP. And all these things cost tens of thousands of dollars to bid on as a contractor. And then they cost thousands, tens of thousands of dollars probably to maintain them and to monitor them and to make changes to them if you have to add products or add services and so forth. So there's a cost related to that. So GSA has been tasked with taking a look at, the proliferation of these contracts. Do we need them all to the extent, let's say the multiple award schedule is supposed to be the way for commercial firms to sell their goods and services to the government. And there's thousands of different items and products and services that you can buy under that. Do we really need these other ones, these other contracts? And if we do, or if there's reasons we need them, what is that reason? So for example, under the schedule, you can't do cost reimbursement contracting. So that might be a reason to have a separate contract. But otherwise, if those other contracts are doing things better, maybe we should adopt those best practices for the schedule and just have one contract. So that's the idea. It's under consideration about whether these things should continue, but I just know from experience, the Alliant small business contract that they tried to compete, I think it went on for 2 years. People spent hundreds or tens of thousands of dollars at least bidding on that, and then in the end, they canceled the whole thing because of litigation. And that's another problem with these long-term 10-year contracts where if you don't get on it, you might not get business for 10 years if that's your field, because all the agencies are supposed to buy off of that. And so people will fight to get on those. And so there's a lot of litigation. A lot of it centers around, scoring, past performance, or, mentor protege joint ventures. How you evaluate those? So there has been a lot of that. So that creates cost and burden and slows down the procurement process. So I think that's all being looked at or considered right now by GSA. So I do think the multiple award schedule spending under that will increase because it's created to be a way to buy commercial services and products more quickly. That's the whole theory behind the contract. So the more we're directed to use commercial products and services, this is an easy way to do that, and that's what it's designed to do. I will say that there's also been a look at the schedule and reforms around cancellation of contracts. So they canceled certain categories where they don't make sales or there's no activity. Why are we spending money maintaining these and keeping these contracts? So those were canceled. There's also always been a requirement to meet minimum sales requirements if you're a scheduled contractor. It usually wasn't enforced because people would, get upset. They'd write their congressman, and there was more leniency. And now, if you're not meeting your minimum sales numbers, your contracts are being canceled. We're also seeing firms with way too many products on their contract. If you sell 20,000 different items on your contract, but you have 3 million, it costs the government a lot of money to negotiate the contract price for all those items. And then you have to report on those things. And then you also have to, if you want to change the price, you got to negotiate that with the contractor. So there's a big cost to the government as well for maintaining pricing and reporting on all these items that aren't being sold. So they're trying to focus the schedule on what's being sold. What are we actually buying under it? And let's focus on that. So if you're not on the schedule, you should get on the schedule because it's an easy way to sell to the government. There's easier ordering procedures and so forth. But if you are on there, you need to make sure you're getting your sales. You need to do your reporting on time. Don't give them a reason to cancel your schedule contract. And then one other change I want to mention about the schedule is that they're transitioning to transactional data reporting. Um, Previously, the schedule was had this requirement basically to give the best favored customer commercial prices to the government. So it's not a commercial practice, even though this is supposed to be a contract for commercial firms to do business with the government. Um, they required you to make sure that if you ever charge the government a higher price than you charge your best commercial customer, you could be liable for false claims or criminal liability. And so, with the transition to transactional data reporting, where you have to report on each transaction certain information, that's going away. So you won't have that commercial most favored customer reporting and monitoring problem. Now you do have this additional TDR reporting requirement. And so that is a little bit of a burden, more reporting. And it's also, there's a danger there that contracting officers at the contract level will use that reporting to try to negotiate the contract price. Because remember, on the schedule, you're giving a price for one widget. If someone buys 1 million widgets from you, you give them a better price. But that shouldn't dictate that your contract price should be different. So those are some of the important GSA highlights that I wanted to mention to you. Let's go to the next slide. So I mentioned before the revolutionary FAR overhaul. So the FAR is a large document. It grows every time Congress passes a new law. It grows. So they wanted to try to cut down on the number of pages, the number of clauses, and they were trying to look at getting rid of things that weren't statutorily required or not important to the procurement system. Now, the way they did it is a little unique. They've done it they started the process by doing deviations. So you have the FAR that is passed by rulemaking, and now the GSA basically has started doing deviations of that. So they're saying we're not following the FAR anymore. This is our FAR. In my experience in government, that was a very rare thing. There was a handful of times that would happen where you had to deviate from the rule because of an emergency or statutory requirement or some other issue. But what they're doing now is they're doing it by deviation, and so GSA is the first one that does it. So GSA is following this. You have the FAR here. Each individual agency has to do their own deviation. And then, so some of them are behind, some of them are doing it faster than others. And then you also have like DoD, to my knowledge, to date, hasn't done any deviations. So you have so basically we're in a system right now where we have different rules by different agencies. So I'm not sure that's actually a better thing for contractors, especially small businesses. Now the FAR will be done. They're going to enter the rulemaking process next. So that'll take the typical, I would say, a year. Maybe it'll be faster, but they'll do a proposed rule. They'll get comments and then finalize the rule. But that still has to be done to update the FAR. So I want to highlight though this is certainly an indication though the RFO highlights are what we should expect to see in the final FAR when it's proposed and then when it's finalized. So one of the highlights is we have best-in-class contracting, which are contracts that agencies are encouraged to use. And the new FAR RFO introduced this idea of a higher tier, a required use contract. Now, when we saw that, obviously, if you're a company, you want to know whether you're on that or not. And obviously, industry is interested in that too. To date, I don't think they've told us what those are. So that's coming, but keep your eyes and ears open for required contracts that'll be coming from OFPP. One of the changes is they moved the GSA schedule ordering procedures that I talked about before out of the FAR and into the GSA regs. And that's good for GSA because that gives GSA the power to change their own regs without having to go through approval from OFPP and DoD and all the other agencies. So that's kind of a big deal for GSA managing their process and their programs. The new update highlights when you're doing a schedule procurement, don't treat it like a regular procurement. You don't have to do all those things that you have to do when you're doing a contract. You have a lot more flexibility. They focus again, they want to focus on best value, not necessarily always lowest price. If it's a commodity, lowest price might be the best way to go. But if it's a service or something technical, you might want to pay more and get better value and spend more. They eliminated the restriction on single award blanket purchase agreements. For some reason, they had a preference for multiple award BPAs. You're already on a multiple award contract. You do a competition for a BPA. The way to get good pricing for the BPA is to give them buy all the widgets from one company. You'll get better pricing. If you award a multiple award BPA to 20 different companies, they're not going to be able to pledge good pricing because they still have to compete later on. So that was taken away, and I think that's a good idea. They tried to standardize some of the order level materials issues that come up when there are certain things, you're buying a lot of products and services, but there's a few things you need to buy to make them all work together. And so they tried to improve that language and that understanding on order level materials. And they kind of got rid of the focus on the statement of work. Statement of work are fine for certain things, but there's other things you can do like statement of objectives or other mechanisms that you can use. So you don't have to always use a statement of work when you're doing an RFQ under the schedule. Let's go to the next slide. So as I mentioned, again, they're really pushing let's buy commercial to the extent we can. That's a common theme. It's great. Some of the changes to Part 12 highlight that up to $9 million, you can do these commercial buys. You're supposed to use RFQs. You have broad discretion in how you evaluate. There's no need you don't have to, again, do scoring and competitive range and all those formal things you do when you're awarding a contract. They even allow you to potentially accept late submissions, which usually is not allowed in government contracting. Under these new changes, they're focusing on fixed price. They did reduce by 30% the applicable provisions and clauses. They went from 156 to 108 clauses that apply to commercial. When the Federal Acquisition Streamlining Act was first passed, this emphasis on commercial said that things shouldn't apply to commercial procurements unless Congress said so, or it's in the best interest of the government to make them apply. And over time, more and more things apply to commercial, even though Congress didn't say it should. It's just hard for the government to say, we're going to just exempt this. And I know that as a rulemaker myself, when I was in government, we applied things to everything, including commercial, because that rule was important to us. But if you're looking at it abroad, you need to figure out if we apply it to commercial, we're going to drive people from the market. We're not going to get all the commercial products that we could get. So it's a high level thing that this does help by reducing the number of clauses that apply to commercial firms. And it does, they did include construction under this RFO. Let's go to the next slide. So now I'm going to start talking about small business at Part 19. And this is very interesting to me, obviously, given my background. But a lot of these changes that are in this FAR RFO conflict with existing SBA rules. So you have the FAR and Part 19 has small business stuff, but SBA has their own regs that talk about size and size certification and the 8A program and so forth. So some of the stuff I'm going to highlight where the FAR and the SBA's rules differ. And so that's going to actually create, I think, confusion and litigation. And I think you're going to end up in a situation where the Office of Hearings and Appeals that does size protests or GAO or the Court of Federal Claims are probably going to choose SBA's regs over these FAR changes. So I think there's going to be some changes that need to be made to SBA's rules. And to date, I haven't heard that those are happening or they haven't been published. So just keep that in mind. So the biggest concern about the FAR RFO was the rule of two, which is basically says if something can be done by small business, you're going to get two or more offers from small business that can perform at a reasonable price. You have to set it aside for small business. And Statutorily, under the Small Business Act, that only goes up to the SAT. It's above the SAT. It's always been in the FAR pretty much since the 80s, but it was regulatory. So people were concerned that might go away. So it did not go away. They kept the rule of two. It applies regardless of value under this new FAR-FO. But they did clarify that it does not apply to orders. And that's actually, in my opinion, consistent with the Small Business Act, which says you may set orders aside. And, GAO agreed with that position in some cases. COFSI did not agree with that in the Tolliver decision. So there was a kind of dispute there. And SBA and the FAR Council in the previous administration may have been trying to do a rule of two that applied to orders, but those, of course, were withdrawn. And now we know that the rule of two does not apply. You can apply it if you want as a contracting officer to orders. And it's definitely not something we don't want to have protested. We don't want you second guessing. We don't want the Court of Federal Claims or GAO second guessing your decision whether to set aside an order or not. And I will say that there is a little bit of a silver lining here if you're a small business that becomes large. You win a big order. When it comes up for recompete, usually it would have to be set aside again if you're applying the rule of two and it's mandatory. This gives agencies discretion to do it at least on a full and open basis so that a firm that used to be small that won that order could still compete for the follow-on. One other thing that they removed was the requirement to consider 8A hub zone, SDVO, and women-owned before going small from the FAR. Let's go to the next slide. They made some pretty interesting changes to the 8A program. Historically, things had to be sole source below certain values, but they could be, and then they had to be competed above certain values. What this says is before you do a sole source for certain contracts for certain items and services, you should do a GWAC order competition instead of a sole source contract award to an 8A company. There's also a policy in SBA's rules that says once something's been accepted into the 8A program, it has to remain in the 8A program. So when it comes up for recompete, generally speaking, it's going to be competed among 8As unless SBA releases it. Under the FAR change, you can automatically go to SDVO, hub zone, or women-owned without getting SBA's permission. In the area of subcontracting, there's a requirement that everyone be certified by SBA, except for small and SDB. They don't certify those, but it includes women-owned and veteran-owned small businesses for subcontracting plan purposes. So for large businesses, you need to, you're going to have to, if this is in your contract and your subcontracting plan, you're going to have to make sure that firms are certified in these various areas. They kept an ability for agencies to establish subcontracting goals for orders in the FAR. On size certification, this has been a big issue over the years. They, basically said we don't want size recertifications with respect to order competitions each time something's set aside under a contract. Basically, on a long-term contract, you have to certify prior to the sixth year, and then if there's an acquisition or merger, you have to recertify. Once you tell the government you're no longer small for a contract, then you're not eligible for orders under that contract, basically. That's a common sense way to deal with recertification, in my opinion. But it's definitely different than what the SBA's rules say. SBA's rules allow contracting officers to request recertification on an order-by-order basis. They actually are required under most full and open, not including the schedule, but other full and open IDIQs, you have to actually recertify each time you submit an offer for a set-aside order. Plus, SBA's rules had different rules depending on whether the merger was between a small and a small or a small and a large. And they had some rules that were delayed until January of 2026. So definitely different rules with respect to size recertification under the FAR RFO as opposed to what SBA's rules say. Let's go to the next slide. Again, keeping with the reform things, especially out of DoD, you're going to see, I think on November 7th, the Secretary of War, I guess, or Defense, issued a bunch of at least four memos on acquisition reform. Here's some highlights of what they talk about, but these are very consistent with some of the ideas that are being floated right now on the National Defense Authorization Act, which is in kind of conference between the Senate, unofficial conference between the Senate and House, and we think could come out any day now. So that's going to be a theme continuing throughout this administration. Let's go to the next slide. And then there's just one other thing I wanted to highlight for small businesses or any business. CMMC is finally here. And so basically November 10th, this has been a long time coming, years and years in the making, but it's a requirement to have certain level of cybersecurity meet certain standards. It kicked off with the final rule coming out November 10th, and there's a bunch of phases. And there's three different levels. There's level one, which is a self-assessment. There's level two, which is a third-party assessor. And then eventually there's this level three where you have to be certified by DoD. Now, these are for DoD procurements. They're going to start appearing, and they should have already started appearing in solicitations and contracts. It's something you need to be aware of if you do business with DoD, obviously, or you want to do business with DoD. I think there is, there could be more cybersecurity things coming for civilian sides. What we're hoping for is that the rules are standardized to the extent possible so that there's not a different standard or different reporting requirement. We've always tried to argue it from industry's perspective, is to make the rules similar to the extent you can. So we'll be looking out for that as we go forward. I think that is my last slide, and we may have a question. Kevin, do you see any questions?
Yeah, there's one. I think it's related to termination for convenience, and I think the question is around, if I've won a contract, what can the government do to cancel that contract after I've won it? And you probably know this better than me, but my understanding is the vast majority of federal contracts have a clause where the government can terminate for convenience. And they also obviously don't have to exercise option years. So there's a couple levers they can pull to get out of a contract they spent time to award, right?
Yeah, that's always been there. And in fact, there's something called the Christian doctrine, which many, many, many years ago said, even if it's not in there, it's in there. Even if the termination for convenience clause isn't there. As a contractor, you're entitled to claim costs. You can do a claim for like any costs incurred and all that, but the government can always just get out of a contract whenever it wants. And the schedule, as I mentioned before, has a cancellation clause, which both sides have it. So in that case, the contractor also has it, but they can usually get out of contracts if they don't want to proceed.
Yeah, I know we're up on time, but maybe I can just impose on you for one more question. This is something that we kick around in my organization quite a bit, which is, we've seen this pattern of contract consolidation, which has led to fewer companies serving as prime contractors in the market, in particular in small business. Even though small business spending has gone up and contract spending has gone up, the number of unique primes has gone down. And, with this sort of doubling down on consolidation of contract vehicles to GSA, and I would also say sort of some of the category management principles that they're doubling down on. Do you see anything that would sort of reverse the trend and attract more companies to the market? What if you just put on your prognostication hat and we look 3 or 4 years out? Do you think we're going to see some influx of companies into the market, or do you think it's going to continue to sort of consolidate a little bit?
I think it depends. It's pretty clear that they want to buy directly from OEMs, buy directly from the software person themselves. They're not very, there's a hostility to resellers. There's all kinds of policy ideas being floated around about how those work. I think there might be misunderstanding about what value-added technology resellers actually do, the services they provide. Sometimes they provide a lot of services. So I think there's a hostility to that. There's definitely an idea of why am I buying from these resellers? I'll just buy from the big company or the big software provider. But on the other hand, if you have some innovative drone, ship, cybersecurity, all the weapon stuff that they're into, all the DoD stuff, any cyber AI stuff, those companies will do well. So it just depends on what you're trying to sell, what your services and goods are.
Right, right. Well, I could probably have a ton more questions to you, but I want to be respectful of people's time. So thank you, everybody, for joining us today. I'm going to kick it back over to Carl to wrap up.
All righty, everyone. Thank you for joining us today. I first want to say a really big thank you out to Lex Park, out JMU, Claire, Veronica, who helped put together these slides. Kevin and Ken, thank you so much for providing your time and expertise to this. And of course, our sponsor, John Marshall Bank, Alex, James, thank you so much for sponsoring us today. My big key takeaway out of this as an alum and member of the JMU Federal Dukes is that I am amazed at the amount of resources that we have at our JMU fingertips. You just spent an hour for free getting some really, really great advice for, quite honestly, what I would see click on, pay for a couple $100 for at least to get a 1-hour conference and access to subject matter experts in government contracting. What a great way to wrap up 2025 and the way to, see where we went, see where things are going, and listen to subject matter experts. Please follow us along if you already haven't. We're on Facebook, LinkedIn, Instagram, and Twitter. And one challenge I have to everyone out there who was here today, go ahead and post this. This was an incredibly good briefing. This will actually it's recorded. So please go ahead. We'll be posting the recording site later on as soon as it's available. And then go ahead and repost this. This will be out there in perpetuity for everyone. But once again, I hope everyone has a great day. It was great seeing you guys. Thanks again for all the support. Go Dukes.